Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about TEXTRON INC quarterly report. TEXTRON Inc. operates globally in various businesses and services across 6 segments. These include aircraft manufacturing and sales, business jets, turboprop and piston engine aircraft, helicopter supply and maintenance unmanned aircraft systems, and electronic solutions industrial products, blow-molded solutions golf cars, off-road utility vehicles, electric and combustion, engine-powered light aircraft and gliders financing services for aviation aircraft and helicopter purchases. These diverse offerings position TEXTRON Inc. as a leading provider of innovative solutions in the aerospace, defense, and industrial sectors. TEXTRON Inc.'s stock price stability. A balance of factors. TEXTRON Inc.'s stock has experienced a relatively stable net performance over the past year, with its one-year return reported at approximately -2.5%. This stability can be attributed to a balance of positive developments and offsetting challenges or ongoing market perceptions. Mixed earnings performance, where TEXTRON consistently met or exceeded analyst expectations in adjusted EPS but sometimes fell short on revenues, contributed to this trend. Segmental strengths and weaknesses also played a role, with TEXTRON Aviation showing revenue growth and Bell experiencing increased revenues due to military programs, while the industrial segment declined. Analyst sentiment was largely neutral, with a mix of hold and buy ratings, which further contributed to stability rather than a strong directional push. Leadership transition and corporate restructuring were significant organizational changes, but their impact was likely minor and integrated. The company's consistent guidance and shareholder returns also supported stock price stability. The absence of overwhelmingly positive or negative external shocks and the balance of positive developments and offsetting challenges ultimately led to TEXTRON Inc.'s stock price making no significant net change over the past year. The primary drivers of revenue growth or decline for TEXTRON's financial performance can be summarized as follows. Revenue growth. TEXTRON Aviation experienced a significant increase of $451 million, driven by higher aircraft and aftermarket parts/services revenues. Bell saw a rise of $100 million due to increased military aircraft and support programs revenues. Finance revenues surged by 116.7% in 2025 compared to the previous year. Manufactured product revenues also grew by 5.4%. Revenue decline. Industrial segment experienced a decline of $79 million, primarily due to lower revenues at TEXTRON Specialized Vehicles. TEXTRON Systems saw a decrease of $20 million attributed to lower volume and mix. Aviation's revenue dropped by $4 million. These factors collectively contributed to the overall financial performance of TEXTRON. Net income and profit margins. Overview. The company's net income and profit margins have undergone significant changes over the past year. In the 3 months ended September 27, 2025, net income increased by $11 million, representing a 5% growth compared to the same period in 2024. However, this trend was not consistent across all periods, as net income only grew by $3 million in the 9 months ended September 27, 2025, resulting in a mere 0.7% increase. Profit margins have also experienced fluctuations. The company's gross margin decreased by 90 basis points in the first 9 months of 2025 due to lower margins at the Bell segment. Additionally, net income margin declined from 6.79% in 2024 to 6.48% in 2025. Segment-wise, the Bell segment saw a significant decrease in profit margins, while TEXTRON Systems experienced an increase. These changes can be attributed to various factors, including shifts in market demand and competition within specific segments. The company's ability to adapt to these changes will play a crucial role in determining its future financial performance. The company is indeed generating positive operating cash flow. A review of the financial summary reveals that the 9 months ended September 27, 2025, saw an increase in operating cash flow to $629 million compared to $561 million for the same period in 2024. This represents a significant growth of $68 million, indicating a strong and improving financial performance by the company. The company's debt level has experienced some fluctuations in recent years. While the total manufacturing group liabilities increased from $9,229 million in 2024 to $9,501 million in 2025, the long-term debt showed a slight increase from $2,890 million in 2024 to $3,038 million in 2025. However, the non-recourse debt principal payments decreased from -$15 million in 2024 to -$12 million in 2025. In terms of interest expenses, there has been a significant increase of 27% for the first 9 months of 2025 compared to the same period in 2024. This is largely due to the 15% increase in interest expense, net in the third quarter of 2025. Despite this, finance segment interest expenses remained relatively stable, with a slight decrease from $14 million in 2024 YTD to $13 million in 2025 YTD. Overall, while there have been some changes in debt levels and interest expenses, the company's financial situation remains relatively stable. The financial performance of Textron segments and regions varied significantly in the first 9 months of 2025. On a positive note, Codex and Textron systems showed improvement, with revenue decreases of only 2% and 33% increase in segment profit, respectively. The finance segment also performed well, with revenue increases of $14 million and $18 million in the third quarter and first 9 months. However, several segments and regions struggled. Textron Specialized Vehicles saw a significant decline in revenue, decreasing by 25% in the third quarter and 19% in the first 9 months. The industrial segment as a whole experienced revenue decreases of 9% and 10% in the third quarter and first 9 months, respectively. Additionally, Textron eAviation's revenue decreased by 17% and 9% in the third quarter and first 9 months. Management is optimistic about the company's outlook, citing a strong backlog of $19.1 billion in remaining performance obligations that will generate revenue over multiple years. They are also taking steps to enhance borrowing power by separating the finance group from the manufacturing group and managing debt through note repayments. While acknowledging potential challenges from government budget changes, management is confident in their ability to control costs and implement cost reduction activities. Overall, the company appears well-positioned for long-term success, with a multi-year revenue stream and sufficient cash reserves. The company has a history of paying out dividends to its shareholders. In recent years, the company has allocated significant funds towards dividend payments, with a total payout of -$19 million in 2025 and -$16 million in 2024. This indicates that the company prioritizes returning value to its investors through regular dividend distributions. Concerns about inventory buildup and supply chain disruption exist. The financial summary highlights concerns regarding inventory buildup or supply chain disruption. Specifically, there is an increase in total inventories from $4,071 million in 2024 to $4,464 million in 2025. Additionally, the company has a higher LIFO, last in first out, inventory provision of $193 million impact in the first 9 months of 2025. These numbers indicate potential issues with inventory management and supply chain efficiency, which may have significant implications for the company's financial performance. That concludes the financial summary for TEXTRON INC. Feel free to comment below, and I will be happy to answer them when possible.